Hello and welcome to this evening's recap. And yeah, I'm not going to edit this video. It's gonna go on YouTube first off, so you guys are gonna get it on the Discord, and then the guys on Twitter are also going to get this on YouTube. And I felt this was a really important video, so that's why I uploaded the live stream on YouTube, and I'm also gonna upload this one on YouTube also. Um, Now, the reason why I wanted to upload the live stream first is, and if you're watching this video, you've not watched the live stream, that's the video before this. The title is Euro US Dollar live stream, and the date, you're gonna see the date on the video is 29th of February 2024. So in case you're watching this in the future or something, and you want to reference what day I'm talking about, so that is 29th. All right, so enough of the boring stuff. Let's get into the meat of today's video. Okay, so if you watch the live stream, which you're supposed to watch first, on the live stream I mentioned that DXY, I legitimately did not know what's going to happen after price sold up from, or it went below the sell side. All right, and the reason why it said so is because, again, on the live stream I already talked about this. You can look at the range on dollar. The range in dollar so far is not a trend mark. Or before I even talk about the range, look at price right now. Tell me what you can see in price. So if you conduct what I call a 3-day range profile, this has to be a part of the analysis. And I did a couple videos a couple months back, I think around 2 months back, and I was teaching my trading model for day trades. And a part of the trading model is something called 3-day range profile, and I want to talk about it on this video. Now, I want you to look at price right now. Tell me, what is the profile prior to all of this, prior to today's price action? What is the profile on price been so far? Has it been trending higher? Has it been trending lower? Or has it stayed sideways? Obviously the answer is we have been sideways on price, right? So you can see here, after the market creates this high on Wednesday last week and then this low on Thursday last week, we have not left the range. Now, what I was talking about on the live stream today was, if we wanted to go below sell side, this should not have happened. This. Usually, if the market wants to go for a liquidity pull, and this is very important. Now, I cannot stress this enough. Oh Lord, I really cannot stress this enough. This is extremely important, and that's why I'm doing this video in the first place. If you don't grasp what I'm saying on this video, then the entire point of me uploading this to YouTube would have been defeated. Alright, so it is really essential you understand this point I'm making. And again, I don't like to do hindsights, which is why I uploaded the live stream. So you would have seen me talk about this on the live stream first, before doing a review of today's price action. If you have a journal liquidity, you want that journal liquidity to be a low resistance liquidity run. How can we define low resistance liquidity runs? A low resistance liquidity run is defined as price's willingness to want to get there. How quickly does the market want to get there? If there's manipulation, how fast does the market want to get for or to that liquidity pool? Let me show you an example. All right, so if our assumption here on DXY is liquidity pool is on the sell side here, this sell side, which we participated in last week, all right? So liquidity pool is on the sell side. We actually traded this last week on the live stream. All right, so sell side liquidity pool down here. That's where we want to see the market reach down into. Now look what happened prior to the market running for sell side liquidity pool. We have a run on this short-term bias liquidity into a balanced price range, right? So the balanced price range is defined by the low of this H1 bearish candle and the high of this H1 bullish candle. So that's the range of our balanced price range. Now, in very close proximity to that balanced price range, we have a short-term high. What's going to rest above that short-term high? That's going to be bias liquidity. the market runs above buy side liquidity. Now look at what happens next. And I talked about this on the tons of video last week. All right, so when I was doing a bunch of reviews last week, we're talking about this back and forth. Now, if you look at this delivery from last week, the moment we get into an active kill zone, right? The active kill zone is London session. Because we already manipulated against buy side liquidity, the algorithm has no problem reaching for sell side. Not only does it have no problem reaching for sell side, it wants to get to sell side quickly, right? It's seeking sell side fast. Because that's where counterparty liquidity would be resting. So we can class this as a low resistance liquidity run signature. Because the market has no problem getting down there after a run stop or a retracement back into fair value. Now, when I mention fair value comes in form of inefficiencies or liquidity pools, right? Again, inefficiencies are forms of liquidity, right? So fair valuation is if we are looking at a bearish order flow, a fair valuation is going to be premium arrays, right? So bearish order block, bearish negation block, break blocks, bearish inefficiencies, those are all premium fair value in bearish order flow. So in bearish order flow, you seek premium fair value for yourselves. In bullish order flow, you seek premium fair or discount fair value for your longs. That's the way it goes, right? So it can buy both shorts and long. And remember, ODIs are also premium arrays, right? So rejection block, ODIs, that's all premium arrays. So you can buy torrential cells as long as you understand order flow, you understand the journal liquidity, and you have a defined range, right? So defined dealer range is from this line here to this low down here. So any run on stops is what we know as internal range liquidity run, to then pair against external range liquidity run or liquidity down here. Now, the point I'm trying to bring across here is just trading what you see. If you would watch the live stream, which I'm hoping you have, because if you've not watched the live stream, then you might not fully grasp what I'm saying on this video. Again, my goal is not to teach. My goal is just to show you through day-to-day experience how the market delivers. Now, my style of trading, what I was preaching earlier on during the week, I like to, when I take on the trade, I like to see the market expand. So on Tuesday's live stream, we tried a long in euro. We got stopped out. We attempted longs in euro again. Long close. Stopped out break even. So the first long on Tuesday in euro was stopped out at a loss. The second long at London close, market offered around, I think, 15-20 pips. Reversed back to break even. And then Wednesday, London close, we tried another long again. It was what we want to see the market do on Wednesday, the market did exactly that. So I did a video, London close on Wednesday, and I mentioned if we're going to be bearish in dollar, it has to not trade because it's a propulsion block. It has to sell for a propulsion block. And then overnight, going into London session, we want to see the market return back into this dollar range. And then from there, we want to see the market run sell side liquidity. Now, this is where the general liquidity, or I was saying the general liquidity, has been on dollar all throughout the week until I think right now. General liquidity, I've maintained, has been sell side. And that's what we try to sell short on Tuesday and failed. And then we were attempted during London close on Tuesday and got stopped at break even. And then we attempted again on Wednesday. I don't know about you guys, but again, I did not take any partials because I wanted to see the market go for sell side. Now, here's what I was mentioning on the live stream. The fact that the market is doing all of this, it does not need to do this leading up to New York session. What's the reason why? It does not need to manipulate liquidity because it's already done so on Wednesday. Look at what Wednesday has done so far, or prior to today's price action. Wednesday ran above this line here, this VI from London close on Monday. Initial high from Mondays, high from Friday, high from Thursday, and the high from our parent price. So this is our initial dealer range. All price action has been within this dealer range here. Because the market has run up into external range liquidity, if this is a low risk and liquidity run, it should not be doing this. You want to see one-sidedness. Let's just do multiple examples just to communicate the point across. All right, let me just show you what low resistance liquidity runs would look like. So I could use I like to use USDJPY for my examples. So I could use USDJPY, and we could look for just one-sided market profiles, and you would see what one-sided market profiles look like. So you can see here we have very clean eyes up here, right? Clean eyes up here, buys liquidity. Order flow is bullish. The reason why order flow is bullish is because look at where the market has been driven up, or look at what direction the market has been in for the last couple of days or weeks. It has been bullish. So we can assume order flow is bullish. All right, so order flow is bullish, right, on USDJPY. Now let's look at prices when it's going to get up here. That's how you measure order flow, right? So USDJPY runs below sell side here on a Wednesday, right? Again, this is USDJPY. So because we have yen here, we can expect Asian session to be an active kill zone, right? So Asian session starts, and this is February Thursday. So Asian session starts here. Watch this. The moment Asian session starts, the algorithm starts to price in for buy side liquidity because of the run and stop the previous day. The market already ran sell side liquidity the previous day into this inefficiency. Buy side and buy side inefficiency. What happens next? During the Asian session, the algorithm wants to reach for a buy side. It has no problem reaching for a buy side liquidity. This is a low resistance liquidity run. In low resistance liquidity runs, price has no problem reaching that liquidity pool. Price does not want to go sideways. Okay, that's the main point I'm trying to communicate across. When we anticipate one-sidedness in price, and what I like to teach as my model is, I have refined my model over the years to only trade one-sided market conditions. And the times where you're going to see me get it wrong is if market condition is in a sideways market. Okay, even though I have a lot of experience, there's still sometimes where I'll get blindsided by the market, and once I realize, I usually just step aside, right? So again, I only want to trade when the market is poised to expand. I don't care if it wants to expand for buy side liquidity or sell side liquidity. I want to see the market expand. And if it's poised to expand, now I'm gauging the willingness in the marketplace to want to reach for my target objective. If my target objective or my target liquidity is low resistance liquidity run, the market should have no problem reaching there. The market should want to show willingness when I reach there. And that's what we know as displacement, right? So if our general liquidity is on the buy side, we've anticipated higher time for order flow to be bullish, and our general liquidity is on the buy side, then we do not want to see the market stall in wanting to reach for a buy side liquidity. It's just like here. So when the market gets into an active session, active kill zone, right? Again, it's all about time and price, right? So USDJPY, dollar, yen has active session during Asian session. That's why you're going to see a lot of yen pairs. They move a lot during Asia because of yen, right? So yen is heavily traded during Asian session. In case you're wondering why, like GJ, for example, moves a lot during the Asian session, right? So you can see that lower liquidity run, the market has no problem reaching for that inefficiency. You can see another one here. We have clean highs up here. I'm so excited. I'm stammering. We have clean highs up here in the marketplace. We run below the sell side here, and then the market runs below sell side one more time. And look what happens next, right? Going into NFP, I think this is probably NFP Friday. The market has no problem reaching for buy side liquidity. Okay, but now let's watch this. If this is a low resistance liquidity run, if we're terming this as equalized, right? So let's say we've done analysis. We said, okay, now the market's bullish. We have relatively clean eyes up here, and the market runs below this sell side. What do you want to see in price? What do you want to see the market do? Do you want to see the Do you want to see the market consolidate? Do you want to see the market trade lower? What are you looking for? Rapid feedback in price. It has to be rapid. You're looking for immediate feedback in price. If this is the low resistance liquidity run, right? So going into Asian session, are we seeing that one-sidedness in price? No, we're not seeing the one-sidedness in price. What's it doing next? It's trading down into a discount. The market is trading down into a discount. Broken structure in the upside. Should this not expand and just keep going higher? Why is it doing all of this? Why is it going back and forth like this? This is not a high risk and liquidity run. What's the market doing? The market is just consolidating. If price wants to reach for a level of liquidity, it would do so very fast. But what you can see here, and the reason why I'm trying to emphasize this point here, is if you look at dollar, again, watch the live stream, and that's why I mentioned below this low here, it was a confluence of factors, and that's why initially I wanted to leave my trade on for the run below this low here, and eventually this one down here. But again, looking at all of this factor, and then looking at the fact, and this is also how you can measure high probability market conditions versus low probability market conditions. I'm going to teach you something really neat here. Now, I want you to watch the run from when unemployment claim numbers, which is where we're taking our entry, right? That was before core PCE price index and unemployment claim numbers came out at 8:30, right? So 8:30 is here. So we were trading somewhere around here, right? So we trade the high for the session, right? And this is the end of New York session. Actually, move this back just so we can see the entire New York session. So we're selling somewhere around here, essentially buying euro somewhere around there. And I mentioned that obviously we want to see, because treasuries was weak at that time, we would want to see treasuries rally at the economic release. Now watch this. 8:30 comes, bond starts to rally aggressively. All right, I want you to ignore all of that price. I want you to focus on this. Focus on what the bonds was doing, right, during the session, during New York session today. So just to give you an insight into New York session, this is start of New York session and end of New York session, the bond market. Bond market absolutely bonkers. Starts rallying at 8:30 aggressively. Now, what is the correlation between the bond market and currencies? If bond market is going to go higher, dollar should go lower. If dollar is going to go lower, euro should go higher. That's the correlation, right? Now, why is this important? Because if the treasury bond is going to see huge one-sidedness to the upside, if we're anticipating huge one-sidedness, and we're actually in real time seeing huge one-sidedness to the upside on the bond market, that should follow through with huge one-sidedness on the downside on dollar. Does that make sense? So if we're seeing huge one-sidedness on bond market higher, we want to see huge one-sidedness on dollar lower and huge one-sidedness on euro dollar higher. Now let's look at what euro dollar was doing within the session. So let's go and look at 8:30. I'm going to get rid of all of this. Let's get rid of all of the annotations. All of the annotations. All right. So 8:30, we already bought down here. All right. And then look at euro. Let me show you what this looks like. So I'm going to pull up the comparison tool, and we're going to compare treasury bond, the 30-year treasury bond with euro. All right. Now watch this. 30-year treasury bond has no problem going above the highs from today, the highs from yesterday, the highs from Tuesday within New York session. Absolutely no problem at all. Trades above the last 3 days high. Absolutely no problem. That's extreme one-sidedness on treasury bond. Now, did we see that in euros? So now let me delineate the session. Let's look at the start of New York session to the end of New York session in euro. Bonds are going one-sided. Is euro going one-sided? No, it's not. It's a little back and forth. Just back and forth, back and forth. And I was talking about candlestick closures, and I mentioned how when candlesticks close very close to your highs, that usually is an indication of strong order flow. And I was talking about the characteristics of price. You can see this one here, a lot of wicks in the marketplace. Back and forth, back and forth. So what you're seeing here is bonds are rallying massively. Euro is not showing that same willingness when I rally massively. That should start, the alarm bells should start to like flash in your head, because you know something is wrong. Something is wrong, because if bonds are going to trend higher, euro should trend higher. I'm not saying euro does not trend higher, but we should see a similar degree of willingness in euro to want to get for buys liquidity. Again, the overall drawn liquidity was this high here, because that's the initial high of the week. So if euro's going to get up here, it should not have any problem reaching for this. No problem at all. Should actively want to get up there. Have no problem reaching for this and up there. But it does. And that's a problem. Now, if you couple the fact that you are seeing in real time currencies struggle to see upside, along with the fact that we have been in a consolidation profile for the last 3 to 4 to 5 days, that's all the feedback you need now to manage your positions. And that's why I tweeted that out today. You don't want to trade your ideals of price. You want to trade what you are seeing in real time. That's how to be the best trader. The way to be the best trader is to make decisions based off of what you see in real time. Because you got to face the fact. The fact is, all you have going on for you is your ideas of price. All those guys who are claiming they know the algorithm, they've cracked Enigma, bullshit. None of you guys know anything. You guys are all broke. You don't know jack shit. Alright, so just shut the fuck up. And I know I'm saying this on YouTube, but again, it's just ego talking. They take losses. You don't see your losses. They're not showing your losses. Well, they'll flex on Twitter, claiming you're gods and they know everything and they know the algorithm, blah blah. BS. Alright? I'm telling you a real thing right now. Right? So I'm not trying to sugarcoat anything. I'm not trying to like, hide anything from you. This is the real thing right now. I know you think you know the algorithm, you know time, you know everything, but your number one job as a trader is to make decisions based off of feedbacks in price or feedback in price. If my expectation is I want to scale something off down here because that would make me more money, well, that's a good expectation, right? That's good expectation. I'm gonna scale something down here because I think this I should hold. We've run above buys liquidity, so I want to scale something down here. Good expectation. But what is market information right now? Market information right now is the last 1, 2, 3, 4, 5 days we have been in a consolidation, and this rally, or not rally, but this decline lower should have been more one-sided, more sustained, but it wasn't. It wasn't more one-sided. It wasn't sustained like you saw on the treasury bonds, like you saw on gold. We talked about gold today. I talked about gold this week. Now, I don't trade gold on a day trading basis, but for those of you guys who trade or who trade gold, essentially, I did a breakdown of this pair, where the general liquidity is, how we should get there, and it's done so. Now, look, I want you to watch this, all right? Now, look at gold. Look at the daily candle on gold. How was this candle closed? Bullish. Gold closed bullish. If gold closes bullish, what do you want to see dollar do? Do you want to see dollar close bullish, or you want to see dollar close bearish on a daily time frame? Obviously you want to see dollar close bearish, because the correlation between dollar and gold is, if gold is bullish, dollar is gonna be bearish. You got it correct. Now let's go look at dollar. Has it closed bullish or bearish? Oh no, dollar is also closed bullish. What's going on? Well, if dollar is going to close bullish, gold has to close bearish. But we have a disparity here. There's a disparity. This is what you call asymmetry. The market is asymmetrical. Well, what are you talking about, Gene? What do you mean by the market is asymmetrical? In markets with clear order flow, one of the characteristic of that kind of market profile is symmetrical delivery. So when I say symmetrical delivery, I mean if dollar is rallying, gold is selling off, foreign currencies are selling off, bonds are selling off. This is what we want to see for trending market conditions. That's what we want to see. If dollar is going lower, gold has to go higher, foreign currencies has to go higher. So euro dollar, pound dollar, Aussie, all bullish, USD CAD because dollar comes before CAD, bearish, right? USD CHF, generally bearish. That's the normal correlation you want to see in the marketplace. But in asymmetrical markets, you're going to get disparity. Dollar is doing one thing, bonds are doing its own thing, currencies are doing its own thing, gold is doing its own thing. Chaos, right? So I think I should tweeted that out today in Twitter, and he called it chaos. That's what it is. And one of the characteristics of this kind of market profile is they are the most frustrating to trade in. They would frustrate you. Even if you have a lot of experience, you would get frustrated trading market profiles like this. And the reason why you're going to get frustrated is because profiles like this are intended to seek liquidity. Market's not delivering on any higher time frame liquidity. Clear example, again, I did live streams and evening commentaries every single day from the start of this year until now. And we went through all of this market profile. And this market profile. So what I want you to do in market profiles like this is go and study market profiles like this, and you will see that asymmetry in the marketplace. And you see how difficult it is. And you can see everyone all over Twitter was complaining about market profiles like this. They're all complaining about how shitty the market profile has been so far. They're absolutely correct. Market profile to start the year has been extremely shitty, right? Almost similar to what we got from last year. And if you remember last year, or this year, sorry, I was using multiple examples to show you how this kind of profile would happen and how to anticipate them. And that's what you're facing right now. So some of you guys who are strong at it will be like, well, I know what I'm doing, Jane. I know the algorithm. I know where price is going for. And you want to go and try to push your luck in conditions like this. When I've mentioned, once I realized that I am not, in one-sided market conditions, and when I say one-sided market conditions, I mean conditions that are poised to trend, see huge displacement. Those are conditions I want to trade in. I don't want to have any problems making money in trading. I don't want to see through trades and struggle and worry about if the asset I'm trading is going to trade against a reference asset. I don't want to have to worry if USD is going to sell off while dollar is buying, or gold is going to have to buy while dollar is also buying. I want to see clear higher time for sponsorship. And one of the signatures in price of the lack of clear higher time frame sponsorship is disparity. Correlated asset disparity. You would get correlated assets go in opposite direction. Correlated assets generally are supposed to go in the same direction. So if dollar is going higher, bond should go lower, gold should go lower, euro dollar should go lower. But if dollar is going higher, bond is going higher, gold is going higher, euro dollar is going lower, if you're smart, you know something's off. You know this is not conditions you want to trade in. The market is giving you feedback, actively giving you feedback. And that's what I'm talking about. If you're going to be successful in this game, the number one thing you're going to have to do is you're going to have to learn to kill your ego. You cannot come to the marketplace and be egotistic. You cannot tell people you know the algorithm and you buy your stop loss. How dumb are you to think, tell people you buy it because you made a few profitable trades? Oh, I buy your stop losses, bro. I buy where your stop loss is and I take profit while you get bullshit. The market can humble you anytime. And when I see people go online and do stuff like that, it just tells me you don't have enough experience with the marketplace, or you don't understand what it is to really sit down and trade and battle your emotions. It is a fucking war. It's not a war against the market. It's a war against your mind. It's a war against yourself. Every time you sit down on the charts to want to make a decision, either to place a trade, to not place a trade, it is war. And if you talk to anyone who's fought war, you will see they treat their experience with respect. You're not freaking gloating. You're not boasting, beating your chest about what they went through. They treat it with respect. And that's what trading is, honestly. It's not 90%. Again, there are weeks where, or not even weeks, there are times where I'll go a month. Weeks. Actually, between late December going into, I think, early February, I went without a single loss. Right? It was around 5 weeks. And it was just all wins and no losses. I had a few break evens, but it was no losses. And then there's weeks where you would have more wins and losses, but you're still going to make a lot of money. And then there's weeks where you're not making any profits, only a bunch of break evens and losses. And that's part of trading. It is about the ups and downs. The major thing is about learning to defeat your ego and react appropriately to market information. And that's why the theme of today's lesson is you cannot trade your own ideals of price. You have to trade what the market is actively showing you. If the market is actively showing you that it's not one-sided, it's not showing correlation or symmetry in price, why would you go and have to force a trade on? Why are you going in trying to look for a setup tomorrow? Stay out tomorrow. You could demo trade. You could study. You could learn. Use that to build more experience in market conditions like this. But your number one job as a trader is to protect equity. And you have to make the best decisions protecting equity. And the reason why is because if you don't learn how to protect your equity, you're not going to have any equity to make profits on. Because you need the equity to make profits. Number one job, protect equity. Number two job, increase equity. Does not mean you're not going to take losses. Does not mean you're not going to go on the occasion losing streaks. You are. Be realistic. That's part of trading. But successful trading is being able to go through wins and losses without a change in demeanor or a change in mentality or a change in your approach to trading. Understanding these are all the ebbs and flows of what you do. This is part of your business. I'm sure a lot of you guys have done your 9-to-5 job. There are days where your job sometimes might be decent. There are days where it is extremely shitty. Or, let's use the gym for example. Some of you guys go to the gym. There are days where you're smashing PRs. You're lifting heavy weights. You feel good about yourself. There are other days where maybe due to lack of sleep or something, it's not good. End goal is you got to show up and make the best decision in the moment. And if you don't learn to trade what you're seeing in the marketplace, not what your ideals of what you want to see. Now, if the market was trending, let's assume today the market was trending and I took a loss on, let's say Tuesday, right? And then the range got stopped out, and then none of this happened. The market was just one-sided from London, like we anticipated, just one-sided from London session going to the New York session. If I get stopped out, I'm not really that worried, because there's no reason why I would expect the market to do this. But because of the context of this, and that's the point of doing your look back. So when you do the look back, a lot of you guys only do the 20-day look back, 40-day look back, 60-day look back, if they're the ranges. What I want you to also do is do something called your 3-day range profile. You're looking at the last 3 days of price action. What has price done the last 3 days? And then you're using that to inform yourself of what price could potentially do in alignment with your current market sentiment. That's how you become a better decision maker. You're letting the market itself inform you of what actions you need to take, how you need to manage your trade, how you need to manage expectations. Because trading is essentially taking action on expectations. If your expectations are not aligned with the marketplace, you're going to struggle. You're going to really, really, really struggle. So I don't want this to be a very long video where I just go on a rant. I wanted this to be raw and unfiltered. So hopefully it is. I will do a Q&A live stream tomorrow around probably 9 a.m. For you guys in Discord. In the meantime, you guys all trade safe. Have a wonderful evening and also enjoy your trading. Peace.